Hello and welcome to CMS Forex News. I'm your market analyst, Nick Nassad. Today is Thursday, April 9, 2009. Risk appetite returned today to equity markets as Wells Fargo reported that it expects a record profit for the first quarter. That helped stocks rally around the globe and push down the yen against its rivals overnight. The Aussie yen pair, for instance, broke out of its recently formed channel, climbing 185 pips from its low near 70.36 to set an intraday high at 72.20. That was the high we saw on Tuesday. The increase in risk appetite helped offset a weak jobs report from Australia. The Australian economy shed 34.7 thousand jobs in March on a seasonally adjusted basis. The unemployment rate increased to 5.7%. The unemployment rate was at 5.2% the previous month, and the sharp increase was the largest since the last recession in 1991. Turning to Japan, machinery orders rose for the first time in 5 months in February. Orders for 3 to 6 months down the line were up 1.4%, which surprised forecasts of a close to 7% decline. A pickup in orders could reflect that companies have run down their inventories and are ready to invest in more capital spending. Despite the risk appetite in the markets, the euro-dollar pair fell in favor of the greenback today after the pair retested the 1.3340 level. From there, the pair fell 200 pips as European traders potentially took profits prior to the long weekend. Also, comments by ECB Council member Nawatny, in which he said that the interest rate in the Eurozone could fall below 1% and that it would be sensible for the bank to buy corporate debt, pressured the euro. Trade data in the US was also supportive of the greenback. In the UK, the Bank of England kept interest rates at 0.5%. Pausing a rate-cutting campaign that has seen rates go down from 5% to 0.5% since October. The bank indicated that it will keep buying government bonds to fight the recession. It says that it will take another 2 months to finish purchasing the £75 billion of assets that it set out to purchase since it started quantitative easing. UK factory output prices, meanwhile, rose by 0.1% on the month and are 2% higher than they were 1 year ago. That annual rate is the slowest increase in prices in 20 months, continuing a trend of decelerating prices as a result of the recession and lower raw material costs. The data reinforces the idea that inflation does not pose a significant problem and that the central bank can continue to keep interest rates low. The UK trade in goods deficit shrank to £7.3 billion in February. Exports to countries outside the Eurozone saw a marked 13% increase, while imports fell 5.5%. Exports to the EU, however, were down 4.5%. A weaker pound should have a positive impact on the UK trade balance as UK exports become more competitive abroad. The pound-dollar pair saw sideways trading as the Bank of England decision did not make a big splash in the market. The last 3 sessions have seen the pair bouncing between the 1.4780 and the 1.4580 levels, though we did have 3 consecutive lower highs in today's session. The pound was lower despite better risk appetite in equity markets, with the pair testing support slightly below the 1.46 level before rising back to the 1.4660 level late in New York trading. In the U.S., the number of Americans filing first-time claims for unemployment benefits remained above the 600,000 level for the 10th consecutive week, though the 654,000 figure was a 17,000 improvement on the previous week. The total number of people continuing to receive unemployment benefits rose to 5.84 million, a fresh record high. U.S. firms continue to slash jobs as the recession continues into its 17th month. The U.S. trade deficit plunged in February to a 9-year low on a sharp pullback in imports. Imports were down 5.1%, while exports saw an increase of 1.6%, rebounding from a 2-year low and showing the first increase since last July. The trade balance stood at negative $25.9 billion, a much better result than was forecast by economists. The dollar-yen pair rose in favor of the greenback, climbing to the 100.50 area in New York trading. The better U.S. trade data and higher stocks helped increase risk appetite in the pair. Today's action broke the short-term trend line that was established by connecting the prominent highs in the last 3 sessions. In Canada, employment declined by 61,000 in March, and the unemployment rate jumped to 8%, a 7-year high. It's the 5th straight month of job losses, though the pace of layoffs slowed compared to the last 2 months. Still, the data implies that the recession in Canada is deepening. In a bit of better news, the Canadian trade balance surprised forecasts and showed a small 126 million Canadian dollar surplus. Exports rose 5.2% as all sectors increased and automakers resumed production. Imports were up 1.1%, led by machinery equipment. The US dollar-Canadian dollar pair fell strongly in favor of the loonie despite the weaker Canadian jobs data, as higher stocks and higher oil prices helped push the pair to the 1.2210 level. Most of the gains came in the first several hours of New York trading. Liquidity will be low in the upcoming session as Australia, New Zealand, many European countries, and Canada celebrate Good Friday. The only major release to look for would be the Bank of England minutes released tonight. And that wraps up today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.